Hey guys, it is Julie here with JT.Wealth. In today's video, we are chatting about Tesla and their upcoming earnings report. So let's get into it. All right, guys, happy Monday. Welcome back, and thank you so much for being here. Like I said, today we are talking about Tesla, as these guys have their third quarter earnings report coming up this week. So we're going to take a look at some of those expectations and what analysts are saying about the stock. At the end, we're also going to cover some overseas news as well. And just before we jump into all of that, this is just your friendly reminder. If you aren't subscribed to the channel, please consider doing so. Really helps us grow. And if you enjoy this video, make sure you hit that big thumbs up button too. All right, guys, so Tesla is set to report their third quarter earnings for 2020 this Wednesday, October 21st, after the closing bell. And these quarterly results will reflect their new increased deliveries. As we know, they recently broke a record for the Q3 vehicles delivered. They registered production and deliveries of 145,000 and 139,000 vehicles respectively in the September ended period, way higher than the 96,000 units produced and 97,000 units delivered in the corresponding quarter of 2019. So that delivery count marks a 53.7 and 43.6% jump on a sequential and yearly basis and sets a new quarterly record for the auto giant. So this upside really reflects Tesla's ability to overcome some of that pandemic-related restrictions that had caused some of their factories to shut down and others really reduce their manufacturing. Now, looking at the Q3 earnings and revenue projections, the Zacks consensus estimate for earnings in this to-be-reported quarter is pegged at 55 cents, higher than the earnings of 37 cents a share posted in the prior year quarter. The Zacks consensus estimate of 8,203 million for sales indicates a 30.1% jump on a year-over-year basis. This Q3 performance is said to be in thanks to a robust Model 3 and Y demand, a lot of progress in their Shanghai Gigafactory, and solid performance of their energy and storage business. With all that being said, Zacks does rate the Tesla stock as a hold right now. On the other hand, we have another analyst who just recently increased his price target. And that is Daniel Ives over at Webull, who reiterated his neutral rating on Tesla's stock, which he's had in place since April of 2019, but boosted his one-year price target to $500, up from $475 ahead of their third quarter report. Ives wrote to his clients that Tesla's improved manufacturing efficiency and shining Giga 3 success in China will be on full display later this week and lead to another strong bottom line performance, which should beat the street in our opinion. In terms of overall unit demand heading into year-end, we believe Tesla is on pace to impressively achieve in the area code of 500,000 units for the year, a line in the sand that was a pipe dream 6 months ago, as Tesla and other auto players have navigated this unprecedented pandemic backdrop. So some positive outlook there from Dan Ives over at Webull. But also chiming in on Tesla stock this morning is the well-known Jim Cramer, who said, when it comes to Tesla stock, people don't believe anything can go wrong. The gist of his brief video there is that people who buy Tesla believe in Tesla so much that they just don't see any potential downside. So if the stock does go down, how long will it really stay down for? A day, 2 days, a few hours? People who are buying Tesla stock think that this should be a trillion-dollar company and that no one else is going to really be able to compete. Which brings us to our next article from The Motley Fool by Daniel Sparks, which addresses, is Tesla stock a buy ahead of this upcoming earnings report? Now, we already know that Tesla achieved record quarterly deliveries, so could the stock soar on earnings? After announcing record third quarter deliveries, expectations for the electric car maker's financial performance during the period are high. Even more, a soaring stock price over the past year has raised the stakes for Tesla to keep growing its business rapidly. So will the automaker be able to live up to the hype? So we already addressed that Q3 had those record vehicle delivery numbers that were up over 43% when comparing year over year. And in 2020, Tesla's business is benefiting from the launch of its new Model Y SUV as the company's most affordable vehicle yet. Management expects the Model Y sales to eventually rival the sales of its Model 3, which is their best-selling vehicle. So analysts expect Tesla's strong sales growth to lead to impressive top and bottom line growth too. So with Tesla having such strong performance all around, does this make their stock a buy ahead of this earnings report? Now, if we have a great report, we could see the stock go soaring. But if Tesla does miss on any of the metrics, we could see a big dip as well. Or the exact opposite could be true, where we have a great report, but we don't see the stock move that much anyway, as all of this could already be priced in. But an investment in a stock should always be based on your long-term outlook in that company and not just on one single quarterly report. This article states that zooming out beyond the current quarter, investors should note that Tesla's stock valuation already prices in massive growth over the next decade. The company has a market capitalization of more than $400 billion despite trailing 12-month revenue coming in at just $26 billion. So the market has arguably already priced in both continued leadership in electric cars and significant market share gains in the overall global auto market. Because so much optimism is already priced into the stock, this author would prefer a better entry point than the current $445 per share, and says if it did get down below $400, it might begin to look attractive. For now, they will continue to rate Tesla a hold going into its earnings report on Wednesday. Of course, there's no guarantee Tesla stock will ever retreat to this level again, but he doesn't mind waiting on the sidelines, hoping for a more reasonable valuation. Now, when it comes to analysts' stock forecast and price targets for Tesla, I think it's hard to find another stock that differs so widely, as Tesla's price targets range from a high of $578 all the way down to a low of $19, so pretty considerable difference there. For the most part, though, it is currently being rated a hold by analysts, but again, another split with 7 saying buy and 10 saying sell. Looking at Tesla stock over the last year, I think we know that they have continuously defied expectations and gone against a lot of normal valuation metrics. So we will see what the future continues to hold for Tesla here. Now, I am a Tesla holder myself and will continue to hold for a very long time, but of course would love to hear from you guys as well, and what your thoughts are, if this can continue to rise after these Q3 results, or if that excitement is already priced in. So leave it down below in the comments, please. Okay, now just quickly shifting gears away from the Q3 earnings report and looking at some news that came out this weekend regarding the Asian and European markets for Tesla. The first being some substantial growth for Tesla in South Korea, as they account for the majority of the EV sales in the country. So Tesla sold over 10,500 vehicles in the country between January and September, which made up for almost 80% of electric vehicle sales in the country. Now in September, Tesla sold over 2,000 vehicles, which accounted for 91% of all South Korean EV sales in the month. Now, South Korea-based automaker giant Hyundai could prove to be a major competitor to Tesla with its dedicated Ioniq brand of battery EVs unveiled in August, but right now Tesla definitely has a firm foothold there in South Korea. Also this month, it was reported that Tesla is the only automaker that saw sales growth in Germany, beating its domestic and international rivals. Now, in further Tesla news in regards to their European market, Tesla will start shipping made-in-China Model 3 sedans to Europe, a shift from prior plans as electric car rivalries intensify on the continent. Now, this article shows how this can signal both upside and weakness. Now, Tesla did confirm in a statement to Reuters that the delivery of these Chinese Model 3s will begin this month. Now, using this lower-cost Shanghai plant to service Tesla's European market could help Tesla with their profit margin and could also allow them some room for price cuts to stay competitive in the European market with other companies such as Volkswagen and BMW. On the flip side, though, the move appears to offer further evidence of weak demand in China. And Tesla definitely does have some competition in that market. And when Tesla started building its Shanghai factory, Elon Musk insisted it wasn't just a cost-cutting move, but that the factory would serve local demand. But let's keep in mind that this move to sell the made in China Model 3s to Europe is likely to be temporary, as Tesla's newest Berlin plant is set to be completed in mid to late 2021. So those are just some quick updates as to what is happening in some of the other Tesla markets. It is never a dull week with Tesla, as there always seems to be a new piece of news to discuss. So on that note, let me know your thoughts about all of this. I know it was a lot of information regarding their Q3 report. What do you think that's going to do to the stock price, if anything? And what are your long-term outlooks on Tesla? Always love hearing from you guys, so make sure you leave your thoughts down below in the comments. As always, guys, thank you so much for watching. I hope you have a fantastic day, and cheers.